What's going on, guys? It is Sunday, and we are here for our weekly overview. And from what I've seen, just having a little look through, skim look. There's some really good opportunities coming up this week. So we're going to cover all of them in this live stream here. Now, essentially, this live stream is just to save me consistently recording, uploading, because once I've recorded and uploaded, the files serve no purpose. So why not just put them straight onto YouTube, right? Then everyone can watch them, whether it's now or in a week or in a month or in a year. Whenever you want, you can watch this back, and you can share it with a link. Saves a lot of time on everyone's end. So first of all, I hope everyone has had an amazing weekend. And secondly, let's take a look into what we are going to be seeing in terms of fundamental news this week. Now, having a look for what we have here. So I'm just going to tell you rather than show you. If you want to go and have a look at these articles yourself and you want to go and look at these news events, then have a look at MyFundedFX. Sorry, not MyFundedFX. MyFX Books, or what's the other one? Forex Factory or Financial Juice. Wherever your favorable news provider is, take a look. Right, so Monday, the only thing we really need to worry too much about is the home sales for the USD. You've got new home sales and new home sales October. So that is at 3 p.m. GMT in tomorrow's session. That is the only news we need to watch out for tomorrow's session. So we have a pretty clear day there for London, Asia, the back end of New York. It looks pretty clear. Okay, going into Tuesday, we have retail sales for Oz. And that is at 12:30 Tuesday. So again, that won't really affect any of you guys that trade London, New York. Then we have the GfK Consumer Confidence for December, and that is a European event, or Germany to be precise. And then we also have the Bank of Austria PMI as well. And these are 7 a.m., 9 a.m., and that's literally it. The rest of the day we're good. Wednesday, the only major news events to look out for are the monthly CPI for Oz. That is at 12:30. Again, won't really affect anyone trading the London to New York timeframes. 6:30 on Wednesday, so 6:30 GMT is in the morning. You've got the CPI for Euro, which is again specifically Germany. Then at 8 o'clock we have the retail sales and inflationary rates for I believe it's Spain. And then we have a ton of CPI news events coming out of Euro at 9 a.m. Again, this is on Wednesday. We have 1, 2, 3, 4, 5, 6, 7, 8 red folder news events. So please do keep in mind that for 9 a.m. on Wednesday. Then we also have 10 a.m. Wednesday, we have the CPI, Saxony. We have the inflationary rates as well at 1 p.m. for Euro. That's a very Euro-intense day on Wednesday. USD, we have goods trade balance and the GDP growth, and that is at 1:30 p.m. GMT for the USD red folder event. Thursday, we have a couple of Chinese news, so PMI, but again, I don't know many people that trade Chinese pairs, but still, you have to be aware of it. Then we have the retail sales again for Germany at 7 a.m., and this is on Thursday morning. Then we have retail sales for the Swiss franc, 7:30. Euro inflationary rates, again, it's France in particular, I think, yep, at 7:45. Then we have the unemployment rates, again, 9 a.m. on Thursday. Unemployment rates, 10 a.m. on Thursday. Damn, there's a lot on Thursday. Holy. We also have the Judo Bank PMI. We also have the jobless claims, initial jobless claims, personal income, core CPE price index. Again, there's a lot. GDP growth for Switzerland, sorry, Canada, not Switzerland. Unemployment rate for Euro. Then we have the retail sales, CPI for Italy, CPI for the European Union as a whole. A lot of stuff going on, okay? So a lot of stuff. And then Friday, we have just as much. We have a Powell speech on Friday. We have the PMI for the US dollar on Friday. We have the S&P Global Friday. We have the CAD S&P PMI. And we also have the CAD unemployment and employment change. S&P Global for British pound as well. And they are all situated in the latter half of the day. So we're talking 3 p.m. from 12 till 3. So midday till, early afternoon. And then apart from that, Thursday morning, we have a lot of manufacturing PMI. So Chef, Euro, Italy, France, Germany, Euro area, Greece, and then obviously heads into British pound. Apart from that, everything else is all good. Again, we just wanted to cover that so you guys can make sure you're aware of that. Make sure that you check those out. You don't want to be trading into any direct red folder news. So let's get into the bit that everyone's been waiting for, because I imagine half of you now are thinking, this guy is just reading these goddamn news events. You have to be aware though, guys. Remember, the trading environment is just as important as the trade setup itself. So, starting things off here with British pound to the US dollar. Now, we ended last week in the creation of a new low end of a bullish swing range. Again, the low end of the bullish swing range is here. I mean, it's pretty obvious. We've got swing low right there. We're still waiting for our swing high to be formed. Now, we finished last week within this rather large 5-minute range. And price overall has just consolidated through the back end of the market here. Again, we did have Thanksgiving and obviously a bit of a short day on Friday. But collectively, nothing more we'd expect than a bit of Friday consolidation at the end of the week right there. So we are looking for this low to be taken out or the nearest low created. So for example, if we push out of here, we put in a new low, then we break down, there's our swing high. We're waiting for the swing high to form. Again, if you don't know about swing highs, 5-minute structures, all that kind of stuff, the rest of the videos in our channel, make sure you go and watch them. It will show you everything you need to know. So personally, I am looking for this to run out of a bullish range at some stage to give us our swing high. And then I'm going to be looking to go long out of last week's lows into this week's highs. Again, I will allow for a slight deviation here, as we do have this low right here, which personally I'm not really a very big fan of, in the sense of the way that this low lines up. So I am going to allow price to come and liquidate this and then look for longs from this area if it wants to get to that point. Okay. Now, British pound to the US dollar as a whole has had a very bullish move over the last few weeks. We had some slight pullbacks, but mainly just carried on with our bullish momentum. So I am expecting that to continue over into this week. I'm not expecting anything to change, especially when it comes to the fundamental direction of price. We know what we expect from price, and we should be seeing it go bullish again this week. So we do have a liquid low right here and a liquid low right here, so we can copy that over to this. So we have two areas within here that we can focus on for moves to the upside. But overall, very, very clean range as it stands. Okay, so nothing more to go over except for the fact that we need price to break down, giving us a swing high. We're then going to look for price to continue bullish out of here. Okay, on to Euro. Now, there is some really good potential for this pair, exactly the same as GU, NAS 100 and gold. There's some very good long potential this week in our major pairs within the market. Now, right here is an example of why I will let the GU trade slip slightly outside of our parameters. Again, it's due to the liquid that's sitting on the lower end here. Now, we took out the swing high on Friday afternoon. Again, we were bullish after we put out a markup. Again, if you want to see our markups, make sure you drop us a follow on the old trading view right here. Make sure you drop us a follow and you will get the updated and literature backed information that you need for the Sunday markups, essentially. So what I am showing you guys now, but in a written form, right? So instead of having to go over and watch it, you can just have an image and you know what I'm looking at, why I'm looking at it, etc. So right here, we can actually have a look and see what we are currently doing with price as we stand. Now, you can see we took out this swing high and we actually created a swing low in here. Again, we will find that because right now we need to work out if our swing high is in. Remember, if we're traveling up, we want to find our high before our low. Otherwise, there may be some misconstrued points in price. Now, we are going to look for the last range created here. And you can see that from this point, if we count this high, okay, you can see if we follow this back to here, it actually stems from this point right here, which gives us a break of structure to the downside right here. Okay, so there is a possible swing low right here, but we're not going to count that yet because we want to find our high if our high has been established. What we're doing here is we're tracking back the last 5-minute ranges to establish if this would be the correct and corresponding high. Now, from this point, I would agree and say that that is going to be the point where we fully closed out above this high. We have a low right here if you want to use that low, or this low right here will be adequate. This is where we broke structure, so let's just take a deeper look in here. Make sure we're not in market close hours. We're not. So we closed out above this right here, okay? So the first high created was here. The last low was here. So it looks as if our swing high is in. So let's get rid of unnecessary points here. Okay, and then from there we can track back to our nearest deviation in order flow, which we again highlighted earlier. So right here we can highlight this as our swing high. Also, while I'm thinking about it, guys, if you haven't already looked at the liquidity entries video, I highly recommend it. There has been some great entries provided from that system last week, the week before, and the week before that. Again, as always, anything that we show you, teach you on this channel has been back tested thoroughly, to the point where we are actually willing to say that it works. Otherwise, we would be doing nothing more than passing on something that hasn't had adequate testing, which is not, you know, people do, but it's not ideal, is it? Let's be honest. So this right here is a break structure, which gives us a swing low right here. Need to extend that out. Okay. Gives us a swing low. Now we will move this to here just for the sake of it. Okay, we have a very clear POI right here, which is rather large, but again, the size of the POI can be adjusted depending on how much of a refinement you want to make. If I could have that red line there, that would be amazing. There we go. Okay, so now we have our range established here. We have our swing low and we have our swing high. Let's get this arrow out of the way as we don't need that right now. Let's mark that as a swing low. Okay, now we can start to look and see where are the points that price may have some interest in traveling to. Now, number one is always going to be your swing low. We know this, okay? It's always going to be the swing low, because this is where the liquidity sits. Not the swing low exactly, but the area that the swing low is sitting in. Now, we can clearly see the imbalance between the major candles formed here. We can see that this is an unmitigated POI. We can also see that we have a relatively high liquid point right here, which we can highlight. So we could look for price to come and take this area out here, and it may provide an entry to the upside if price is not willing to push down to our low. Again, we will of course trade each setup as it is delivered. We don't want to make too many assumptions before price is delivering. So I mean, apart from this low right here, and the fair value gap and the order block here, there isn't a huge amount to target within this range. Now, if we look externally, you can see that we have quite a lot of liquidity built across these lows here, and we did anticipate price to run just a couple of these lows before extending out of this range last week. Now, it didn't happen. Again, that is part of the way the market moves. We know this. Now, the main thing that we want to look at, the main thing we want to focus on, is what is happening within the current range. Now, this liquidity is in the upper 50%, meaning that the probability of it giving an entry that is going to remain valid is obviously less. But of course, if we do drive deeper into here, it gives us the ability to then trade out, as we've spoke about before. Now, if you wish to trade this range and give a little bit of room, say for these lows, for example, that is completely fine. But if there is an entry given with a clear area of invalidation and a clear opportunity to trade up within this range, I would recommend taking it. Now, as always, as long as you're sticking to your plan and your risk, at the end of the day, making discretionary judgments is going to come down massively to experience. But at the same time, it can be done as long as you stick to your consistency. Now, by that I mean trading this with your stop below the liquid because the liquid sits at the swing low. Then next time you have liquid at swing low, you have to do the same thing. Again, you guys probably know what I mean, but it is always worth covering it. So what I'm going to do is I'm going to add an alert right here, and we're also going to put an alert at the swing high. Now, don't make the mistake that I've done before and leave this too short, and then price works its way around it as time goes on. So spread it nicely out, and then it doesn't matter if price consolidates for hours, it should still hit it. So main objective for this range is run the liquid low right here, possibly tap into our low and go long. Again, notice how the same overall thing we're looking for here, run down into this area and then go long. We have a very nice correlation between these two pairs. We just need to see how they play out now. So heading over to NAS 100, this is a very interesting range, and we gave this out I think about 4 different times to the Discord community, and overall we just keep seeing opportunities pop up. Now, first of all, we had this trade right here. Again, these were example trades of retail. They're not for us trading here. We took out a liquid low. We had the SP taken. Then there was an area right here, and price ran to the target, reaching it. Beautiful, right? Now, when we created this range, which is actually rather large as it comes from this low to this high, so again, a very large but very clear directional movement, we generated these lows right here. And we said that these lows held interest for us in terms of if we tap into here, we may then be interested in going long from there, hence why we have a giant arrow pointing to the upside here. Now, we actually tapped into here Friday evening. Now, I said it before, and I'll say it again, but when you have an opportunity given to you late Friday afternoon, it's not ideal to trade it. So whether the idea looks, 10 out of 10 or it looks 5 out of 10, I recommend just to watch and just to spectate. Now, we did have this area reacting slightly bullish, which is what we wanted, but there was very little to no imbalance to the upside, which means overall we haven't seen that movement yet. But looking at this range here, we still have great potential for upside here. We have our swing high, which is our overall target. We have our liquid area right here, which we have now pretty much fulfilled, so we can just delete this and delete this as the main liquid point that we were focusing on. This low has been collected as this, and this collectively make up the area as what we are looking for liquid, right? Now, the main point is this is the only order block right here that is unmitigated, and our swing low is here. So if you're using your swing low as protection, you're going to need your stop loss below this point. Again, I'm mainly looking for price to react here and go bullish. If we do get a bullish reaction and then head for the high, I will try and jump in on, you know, a short-term move. If we do go deeper, I'm going to be looking around this area for an entry, not necessarily the order block itself, because like I said, the range is still quite open. So there is room for price to come and mitigate those points. So again, similar to what we're looking at GU on EU, either from here to go bullish or bullish from here to then continue. But again, another bullish range. So keep these biases in mind, guys, because they will stand as long as these parameters hold. And like I say, if you are fluent in the way that we trade and the structures we follow, then you'll know exactly what I'm talking about. And if you're not, head over to the videos that we have uploaded lately and you'll be able to learn everything you need from those. Okay, US 30, we are only tracking this for now, but again, pretty similar. Now in this case, we had a bullish range on Friday. We wanted this low to be ran, same as NAS 100. We wanted to look for longs in here to go up, obviously. Then late Friday afternoon, we took our swing high. We generated a new swing range, low to high movement. We broke structure to the downside. We actually tapped into this order block and then ran. Now we did test one of the liquidity entry theories here, and it actually worked beautifully. Again, we haven't built enough data for this variation of liquidity entry yet, but we are currently doing so. So you may see a video updating you on that shortly. But if it turns out to not work consistently enough, then unfortunately you won't see a video on that. So main objective here is that we are going to run this high. If we do run this high, then that will develop us a new range, which will sit something like this, which should in turn line up with the pullback we're looking for on NAS, GU, EU. Again, remember, they are their own pairs. Correlation is fine, but do not expect them to be completely in sync, as there is always going to be a slight deviation. They are different markets at the end of the day. Again, pretty simple. Not a huge amount to say on this one because we're at the high. We need to either take this out or pull back to change our direction overall. But again, bullish. Gold. This is honestly one of the most painful ranges that I have been in over the last couple of weeks, because it's consistently offered entries that have missed by such tiny amounts. It hurts to say about it. Again, this entry here was one of them, and we actually missed by this tiny little wick down here that you can probably just see right there. Just missed it beautifully. Again, that's how it goes. Typical, right? So let's get this out of the way because we don't need to see that. Overall, I said to the guys on Friday, if we're going to sell off from anywhere, it's going to be this area here. Again, we have a collective of highs. There's a fair amount of liquidity. We're building liquid across the lows. I expected price to tap in, maybe drop down to the first and second low here to then continue the long move out of here. Overall, that same bias still stands, but I believe we will run our target before pulling back. Now, if we do pull back this week before running the high, there's a couple of things that I'm looking for. I'm looking for either this low right here, which is situated at around 1991, which is pretty low to be honest. This low right here, if we run this, then I will look for longs. If we run this low, I will be looking for longs. And if this, again, take note of this one, if and only if this structural high is broken first, if we pull back to take this low out, only once that has happened, then I'll be looking for longs. If we pull back prior to breaking this, then that will not be valid, but this low will be. Okay. So if you need to rewind that, feel free. Again, we will be doing a write-up on all of these pairs, so do not panic if you don't understand the information or you haven't really grasped what I've just said. Again, we will be making this public after we have essentially done this. We've finished the stream. We will be making it live for everyone to see, as we consistently showcase our strategy every single Sunday on our trading view. and it consistently plays out. So we want to now show you guys on YouTube, and you can go and back check this, and whatever it may be, or just hit that follow on TradingView and you can just track it from there. Again, very, very simple. Gold, very simple, bullish range, look for either a break pullback or a pullback before, and overall swing high is the target. Okay, US dollar, Swiss franc. Last week we had a bit of a drop off during news, then a big pump up again during some US news. We then had a bullish range given to us, so of course if we're in a bullish range we're looking for bullish moves. Now we came down, swept the low, which is actually a schematic A. Again, if you haven't watched our latest video, go and watch that and it will walk you through exactly what A means. We created the setup, we got our tap in, which was beautiful. Price ran really nice, only up to the liquid targets that we'd already set. Then unfortunately continued down and put in the overall order flow that we were in before, which we kind of said we expected to happen. Okay, weird. We kind of said we expected to happen, but until it actually breaks, we look to go long. Again, we got some nice partials out of that, but we didn't get any full TPs, unfortunately. So let's mark this up here because we have broken this range. First things first, I'm going to delete this alert as we don't need that right now. So you can see we closed out fully below our swing low right here. 1, 2 candles, that's completely confirmed. Brilliant. Now, the next thing to cover is the fact that we have not broken this low right here, and we have not broken this high right here. So we have 2 major high points, or major high and low points, which create our 5-minute range. Again, the last range we were in prior to this was the range that sat right here. Okay, that was the low of the range, that was the high of the range, and so on. Again, we broke all of the rest of the ranges down. So we know at the moment there is no swing low put in. So if we see price break high out of here, that will give us a swing low. If we break lower, we will track the high and continue to do so. So at the moment, the swinging high can be located. The swing low has not been put in. We can locate the swing high, but we need to keep in mind that we may develop again a swing low, break it, etc. We'll just keep it in mind for now. So last point where price pivoted prior to breaking this low. Okay, so we can see that we're breaking structure here. Of course, we put in several smaller ranges. We break down right here. Well, we break down right here, and we break down again. Let's have a look at this range because this range looks rather mighty here. That's your high, so we did break the high, and then the low is here, so we broke it once. Okay, that gives you this to this. Let's double check that's not, yeah, that's all good. Okay, so we know that we've gone bullish from this point. We can go like this, high to the same low in this case. Broken high again, and that goes from this high to this low. We break this high, which goes from this low to this high, which is actually pre-established. Then we break down just before market close. Let's just leave that as an invalid range if you were, and we'll count from, not count, but we'll track from, let's get rid of these. We'll track from here, okay? So right there, that high was ran across this. We took out the low, this was market close, so we're just going to go from here, taking it out, so it gives you a high to a low. Okay, none of these are in here that are valid. That's not valid, that has no low present. Perfect. And you can see here that we took out the low. So again, you know that at this point we've gone bullish into bearish. Now I believe we are going to continue to change our narrative here. We need to find the one that's closest to this swing low. Right here is the low that caused or was created after this break structure down. Comes from here to here. This high right here did not get broken, but this low of course was broken. Even though it brings you back to this high, that was still broken there. So at this point we had a bearish movement down, which then broke this structural high here. Okay, that structural high was broken. That's your new high. This is your new low. We break this down again. Do we take out this? Where was the high here? High down to the low right there. Did we take out the low? No, we took out, well, we didn't take out the high, we took out the low. Which means we've gone bearish there and we haven't broken since. So the actual swing range itself is this high we have highlighted here. So we can now delete all of the excess smush. Let's get rid of the sessions here. We don't need to see that for now. Okay, so we have our 5-minute area here. We have our swing high right there. So now we know the swing high that's responsible for causing the break structure. So this is our swing high. That was the directional movement that caused the break of the previous swing low. So now we've discovered the point where we are looking. Okay, so the main thing to focus on is, are there valid structure points within these overall ranges themselves? So if we look here, you can see that we have this high right here, which holds a fair amount of liquidity because we've taken out 1, 2 internal structural points, and then we've continued going down. So we know that there's relative amount of liquidity here. Okay, so we can mark that up as LG, or liquid grab. Okay. Now we need to find where our POI is. So at the moment we have mitigated, 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 unmitigated. This is the unmitigated point of interest right here. What's going on, by the way, everyone that is watching live? Hope you're all well. So yeah, liquid across these highs right here. Liquid across the highs, as well as a confined area of liquidity. We just need to wait for our swing low to be put in, because what that is going to do is it's going to change the overall measurements of the range itself, so where the 50% sits and so on. So we need to wait for that swing low to be put in. So we're either waiting for price to break down the low to then break high to give us a swing low, swing high, and then we have our range as a collective, or we're waiting for price to push up, break this, and then we can look to trade off of the liquidity areas within here, or we can look to trade off of one of the POIs. Again, as it stands, we don't really want to see it come straight up. We'd prefer to see it go down a little bit first to develop a range that's a bit tighter, as this range is pretty huge right now. So again, same principles. Only once we've put in the swing low from here, we can then look for price to pull back as long as it stays within our rules, and then we'll look to go short. Again, it's a really nice short range there for you, Chef. Euro N, we didn't do a huge amount of this last week. We did have this range just before market close, which actually played out super clean, and I honestly didn't trade it. It was like 10 past 6 on a Friday. There was what we wanted to see within the range met, but again, we just wanted to see it earlier on in the day, so it happens. But you can see down here that this candle never actually closed out. So we didn't create our swing low, which is actually here, until we broke this high. Okay, that was the high that was responsible for putting in that low. So what are we looking for? Once we generated this, we know that we have our directional bias, which is down. We have our swing high, swing low. We had one unmitigated order block. We had one area of liquidity. Again, not a huge amount, but we had an area of liquidity. And then we've tapped that area of liquidity and we've gone in the range direction. Okay, so as it stands, let's see what we have next. Breakdown of structure right there, which is another swing low break. Now we have a lot of these, honestly, low volume, inconsistent candles. They're mainly body rather than anything else. If we look at what we had here, we came up, we broke structure here, so we know that this low and this high are the last bullish range. From this point we go bearish, but we don't actually break structure until over here. So it gives us a low of here to here. Okay, so we don't break our high and we do break down our low. So we know that this point, so we can put that like so. We know that this point is the last point where we were bullish and price went bearish. So we know this is our new swing high. Now, this has no POIs. This has no unmitigated POIs. There's no imbalance here. This is also mitigated by this. There's nothing more than liquidity within this range. So when we know there is no unfulfilled orders within an area, it gives us a little bit of a different scenario because you have two possibilities here. Now the possibilities are: one, price is going to create this range by pushing higher into the actual price range itself. So for example, these are the last 5-minute highs and lows. So it's either going to push up into this range, creating our swing low and breaking the 5-minute structure, but that is also going to create an invalidity. Invalidity, is that even a word? It's going to create an invalid range for us because we've broke structure and pulled above the 50%. Okay, we don't want to break structure above the 50 to create our swing low. We want to do that down there, right? But we don't want to speculate too much. So if price does break up to here, we'll be looking for this swing high to be liquidated to give us possibly an entry down, or we'll be looking for 2 candles to close above this high to create a different directional bias. As it stands, our bias is sell, and it will remain sell until we are invalidated from our overall directional movement. Okay, this is your 5-minute high, 5-minute low. We are looking for price to either continue down to give us a new high and a new low, or we're looking for price to break up to give us a swing low and to look for a liquidation entry to the downside. Again, very clear here. We are creating quite a lot of liquidity across these points, so don't be surprised if we do create a break structure to the upside. Okay, so break out of here, and then we go bullish again just to take out some of these short-term highs here. But as it stands, like I say, bias down. Very, very simple. Look to follow it. I'm going to set some alerts on here now, and we will know if price decides to make a run for it. So we're not going to go over GU, but we are going to go over UJ and, GJ. And then that will wrap up our Sunday rundown here. Again, this is, I believe, probably 35-minute, 40-minute video right now. Yeah, 40 minutes, which again, I think that's ample time if you're going over X amount of pairs. So right here, this is one of the biggest ranges we have currently, except for the one we looked at on gold earlier. This is US dollar to Japanese yen, and we have a swing high and a swing low here. We have 1 point of lower liquidity here. We do have this point now, but again, it still doesn't hold that much validity in terms of what we're looking at. I mean, we will highlight it and put an alert just because it's much closer to price. But overall, you can see what direction we want this range to travel in. We're looking for bullish. Now, the one thing that you really need to keep in mind is that overall there is a very high possibility of a BOJ intervention. And last time we saw a BOJ intervention, we had a 200 pip move in less than 1 minute. So please keep in mind, excuse me, we are heading towards that level, which is 150. So if you are trading this in a bullish direction, please keep them out. Well, if you're trading it in any direction, just keep that in mind, okay? Maybe use a little bit less risk and a bit more caution when we get closer to the 150. We're not far off it. It's only up here, so it's just outside of this range, okay? I'm looking for a pullback to go long out of here. Again, I will be preferably taking longs from here rather than trying to long in the upper half as we are so close to that level. And if we do break this range bullish, I probably will refrain from trading for a day or so just to allow price to decide if it wants to behave differently around that 150 level. I believe we are going to see another movement. Main things to focus on within this range: we are generating a fair amount of liquidity across the highs. We generally have a little bit of gap to fill down here, and we do have again some more liquid being built across the downside, so a pullback into this lower area would be ideal before coming up to take any liquid we create on the move down. Mainly though, this is being powered by the Japanese yen right now, not the US dollar, hence why this is a bullish primary US pair, and USHEF, which was the last one we done, was a bearish primary pair. That really is all I have to say on UJ. Just look for it to run the lows and be very, very cautious of the 150 level. GJ, as we know, this pair trends so heavily when it goes, and it will just generally consolidate a little bit before taking off. Now you can see here that we've had consistent swing high, swing high, swing high, swing high, swing high. Every single high we have put in and marked up has been taken out. So if you were to have traded any of these ranges in terms of just like an hourly, because again, you guys can use this 5-minute swing structure, whatever you want. If you want to use these points as like a 4-hourly trade idea, you see a swing high, you see a swing low, you wait for a pullback within that range, then you go long with your stop below the swing low, you know, aiming for, let's just say, like a 3-day trade or whatever. You can do that. Literally, do whatever you want with it. Now, swing low, taken out. Swing high. Sorry, swing high, taken out. Swing high, taken out again. Swing low. How do we know this is a swing low? Well, there's no other lows below this swing high, so it has to be here. Again, right here, bullish, 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 bullish. Let me double check here. Bullish. Yep. And that's the range we're in right now. So we're in a pretty chunky range here. That is pretty chunky. Now people are probably saying, well, why isn't this low the low? Well, that low is not the low because it didn't form prior to the break structure. So it can't be the low responsible for the break of the range, right? Always remember that. So 5-minute range here. We have liquid within this 5-minute range. In terms of liquid on the excuse me, on the lower ends, this is the only area I can see right now. That's the only area I've got. In terms of, why are these? In terms of this range, these are the only liquid points. So again, down into here, beautiful bullish move out of there. That's what I'm looking at overall. So guys, that pretty much wraps up what we're looking at for this week. Again, if there's any parts you want to go and look at again, just rewind it or just hit me up with a follow on TradingView. The link for that is in the description. As always, if you want to be a part of our live streams that we do on a daily basis, the Discord is the place to be for that. If you want to learn and grow with like-minded people, it's also a great place to be. And if you want to learn how to read, structure, and follow price action the same way that we do, then make sure you check the videos that we have uploaded during the past couple of weeks. So if you want to go and check those out, then you can. Apart from that, guys, enjoy the rest of your Sunday, and I will catch you all tomorrow if you are a Discord member. If not,